What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we had a flat consolidation day, but overall the market structure remains bullish. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 0.3% and we are continuing to see the bullish structure developing with all of our moving averages positively sloping in price action above all the moving averages and maintaining that breakout look above SPY 409. So we are definitely still getting a strengthening bull trend as time goes on. And I do want you to pay attention to that upper Bollinger Band, because as we get too far outside the upper Bollinger Band, we will need to cool down, which is exactly what we've been doing, where we were just way too far outside the upper Bollinger Band. And today, again, we were outside the upper Bollinger Band. So we are continuing to cool down as we climb that upper Bollinger Band higher. So do keep that in mind and don't think just because we're pulling back from overextended conditions that should be confused with a bear market. This is still a very bullish structure of higher lows and higher highs. So I continue to expect short pullbacks to be bought up, and I do expect pullbacks on SPY to be contained between anywhere to 1 to 3% because there are bulls out there buying the dip. So you're not going to get those very large dips unless we lose a critical support level and start to lose this bull trend. The volume still looks very decent and we don't need a lot of volume for bulls to go higher in the market. High volume selling is the only thing I would be on the lookout for because low volume buying is not bearish. Remember, price is all we care about, so while we do look at volume, we do not necessarily care if we see low volume buying. We only will be concerned if we see high volume selling. Low volume selling is more than likely going to be these pullbacks, which are more than likely going to end up being bear traps before the next leg higher. I still expect to see SPY hit to 421 before we get any major resistance from the bears. Any bears shorting this rally until we get to 421 are more than likely retail bears that will get short squeezed, only adding fuel to this fire, only making the bull rally more impulsive. If we start to lose our support zones down here right around SPY 407 to 404, and then we start losing the bull trend, then we can start getting more risk off. But I do believe you need to stay on this bull while we continue to see the bullish structure developing. So I continue to say this is a buy the dip market while SPY is above $400 and the most critical risk level will be down here right around $399. If we start losing any critical support, I would instantly get more risk off because we are coming out of a bear market and that bear market could rear its ugly head yet again if we do lose critical support. On the NASDAQ 100 triple Qs, we were pretty flat on the day, only going down 0.06%. And again, we're just getting way too far extended outside that upper Bollinger Band. So it's nothing bearish about a little bit of a cool down while those Bollinger Bands expand. You can see we're only a few days removed from having the 20 simple moving average crossing back over the 50 EMA, which is how I define a full bull trend. Once we have a full bull trend, it's going to be a very robust bull market that will not be easily taken out. So while the bulls do not yet have the full bull trend, they're getting very close to having it. Critical risk level for the triple Qs will be down here right around 307 and our support trend line right around 303. So as long as we are above these critical risk levels, you can buy the dip because your risk is very well defined. You can see the volume is starting to die off a little bit, but as I said in the SPY analysis, that is completely normal in bull markets to eventually see the volume dying off. All we care about is price. So as long as price is above critical support and we have the bull trend, we do want to stay bullish. The bear in the triple Qs is going to show up right around 324 to about 326. So do keep that in mind as we approach that critical resistance. Just because the bear is at that level does not mean we can't break above it, but it does more than likely mean there will be a battle for control of the market at that level because there are still bears out there that do not want to give full control of this market over to the bulls. But of course, anytime there's a battle, there is always going to be a winner. So we will want to look at the price action at that critical resistance to see who is winning that battle. In the Dow Jones, we were down 0.19% and we continue to see the same story across the indices with the bull trend, and the critical support in the Dow Jones will be at 325 and 320. So as long as we're above those critical support levels, you will want to stay bullish in the Dow Jones. The next price target will be that upper resistance level at 333, and above that we will get a short squeeze that could take us to 337 and then 340. If we lose critical support, get risk off because we're losing the bull trend. So watch those critical support levels and stay bullish as long as price action is above them. In the Russell 2000 IWM ETF, we were flat on the day going absolutely nowhere, and we are continuing to see buyers stepping in at support because intraday we did test the support trend line right around 184 and we did see buyers of the dip. So you can clearly see there are dip buyers out there, and IWM did go on a flat day of buyers of the dip on increasing volume. So we are seeing increasing volume buying in the small caps. As long as we're above 184 to about 182, stay on the bull in the small caps with the next price target up here at 191, and then we could start to run to about $200. On the ARKK ETF, we were up 1.24%, and ARKK did close back over all the moving averages, and we are barely holding on to this support trend line, which is very close to getting violated. If ARKK starts closing down below 44 to about 43, it's going to be a lot more bearish looking, but as you can tell, the Bollinger Bands are squeezing, and the next bull breakout will be that close above 47. So in ARKK, we are getting very bullish above 47 and a lot more bearish below 43. So just wait for the breakout and then you'll know where ARKK is going from there. I would not bother trying to trade while we're in this consolidation because it is going to be very choppy. In the VIX, we were up 7.18% as we are seeing the VIX spike a little bit, which is completely normal on a day that we get some consolidation and a little bit of pullback. It's very likely that the VIX is going to at least get to 20 before the bears bother stepping in. So I continue to expect to see the VIX staying below 24 as it trends down towards 20. If at any point the VIX starts spiking back above 26 to 27, get a lot more cautious of more downside. On Bitcoin, we're currently down about 1.15% with Bitcoin trading at 23,000 and currently back down below the 50 EMA. But as you can tell from the chart, we are still developing higher lows and higher highs. This is definitely not a very impulsive rally, so Bitcoin may continue to consolidate between about 24,000 to about 23,000. But eventually we will see the breakout and we will know where Bitcoin is heading. The next bull breakout will be above 24,000 and then we should be well on our way to 28,000, or we're going to see the bearish breakdown down below 21,000, which is more than likely going to take us all the way back down for a retest of 19,000. But as you can tell, the Bollinger Bands are starting to squeeze, so after this consolidation, we should get the next leg in Bitcoin. On NVDA stock, we were up 1.53% and we did get the bullish breakout with another daily closing high, and we did close above 183. So the next price target in NVIDIA is very likely going to be 196, and then we can start running back up to about 213. Critical risk in NVIDIA remains down here right around 174, and you could also use the risk level at the previous high right around 181. As long as we're above those support levels, you will want to stay bullish. And if we break down below those support levels, look out below because we could be coming back down to about 161 to 158. On Tesla stock, we were flat on the day after a very strong start to the morning because at one point Tesla was trading above $930, but you can see that price target at 904 was just way too strong and we were just getting way too far extended outside the upper Bollinger Band. So obviously profit taking and short sellers stepped in at that overbought condition, and we are now closing back down below 904. So 904 remains a valid resistance until we close above it, but once we break out above that level, it should be a very smooth ride up to about 970. Now we can't say we're going to 970 until we get the breakout above 904, so don't look too far ahead. And we are getting a little too far overextended, so we could be due for a few days of cooling down, which could bring Tesla stock back down to about 864 or 839. As long as we stay above those levels, you should stay bullish because we are in a bull trend and we are expecting to see higher lows. You can see there's going to be no stopping this 20 simple moving average crossing back over our 50 EMA. So Tesla is going to join Apple by going back into a full bull trend. And with Tesla and Apple back in full bull trends, it's going to be very difficult to take down the stock market. On Apple stock, we were down 0.62%. And as you can tell, Apple stock does have that full bull trend that we're very close to having in Tesla stock, but we are struggling to close above this price target at 163. If we can't close above 163, we're very likely going to cool down and close the gap at 157, which is also a very critical support zone. As long as Apple stays above 157 and about 154, you should be staying bullish in Apple stock, but if we lose that critical support zone, we could be coming back down to 150. If we break 163, the next price target will be 166, and then we can go close that gap up there at 174. On the financial sector, we were down 0.83% after we did find resistance after closing the gap, but the longer we stay over the 50 EMA, the more bullish the financial sector is going to become. The industrial sector was up 0.1%, continuing to break out and getting that second day in a row closing above resistance, as we are getting a little too far extended over the upper Bollinger Band, so we may be due for a cool down. The healthcare sector was down 0.74%. We're still in the full bull trend and we are retesting the breakout level at 131 as support. So I do expect to see buyers of the dip at this level, and then the next bull breakout will be above 134. The energy sector was down 2.07%, but overall we are still closing above our 50 EMA. So as long as we are above $75, you can stay bullish on energy. So jumping back over to the S&P 500, as you can tell from all of these charts, we are mostly just cooling down because we were getting way too far extended outside the upper Bollinger Band, and overall we are still seeing very bullish developments with both price action and trend. The trends are becoming very bullish, and we're already getting full bull trends in stocks like Tesla and Apple, and those are some very big market cap stocks that move the entire stock market. So believe me when I tell you that this is the very early stages of a bull trend, which means you should not be blindly shorting strength because it's like walking in front of a freight train. Yes, we will get pullbacks, but they're more than likely going to be very shallow, and they're very difficult to short because there will be a lot of buyers of that dip. So in my opinion, you're going to have a much smoother ride if you trade in the direction of the trend, which is currently bullish. Use great risk management and know your critical risk levels, and don't be afraid to trade this market. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF QQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.